All right. Hello, everybody. Welcome back to, well, not another market open or market close, but a Labor Day technical special. I see all you guys in the comments. This is not the reveal of the new studio, not this stream. That's happening at night. It's what I said on Friday. I know some people probably forgot about it, but this is the recap of Technical Tuesday that we weren't able to do on Tuesday because of because I lost my voice. So the actual apartment stream is at 7 p.m. tonight. So there's no bricks right now. I'm sorry. I know. I saw the comments and I said this on Friday. Hey, there's gonna be two streams. One is technicals, and then the other one will be the actual new background, all that stuff. But yeah, that's not here yet. 7 p.m. We will get that live. Hope everyone's doing well. It's been a long weekend of moving in, getting everything ready, but we're officially here. Officially moved in. And very excited to have everyone here. And at 7 p.m. tonight, we'll go deeper into everything we got going on. So having said that, we have someone who was not able to show up on Tuesday. It wasn't his fault. It was my fault because I lost my voice from the meetup. And as a result, thought, you know what? It's Labor Day on Monday. No markets are opened until technically tonight will be a future stream because the markets will open at 8 p.m. overnight. So we'll see what happens with futures. But let's do some technicals. Ladies and gentlemen, the one and only Jason. What's up?
We have arrived.
Asian Steve is back. What is up?
Asian Steve is back. We are in the house. What's up, everybody? Happy Labor Day, man.
Happy Labor Day, bro.
Even I was kind of excited to see the bricks, you guys. I was like, oh, damn. It's all good. Yeah, we still love you, though. We still love you, man. Just so you know.
Yeah, 7 p.m. tonight we'll do it. That's why it's a little echoey here as well because I'm in the living room. I'm not in the actual studio, but I'm also still I still have to set up a couple more things. I spent 5 hours yesterday getting stuff ready, but a few more things left and then we'll be good.
Excuses. It's all good though. We love you anyways, man.
Are you surprised at how many days the United States has for the market to be closed? Because it's quite incredible, to be honest.
Am I surprised?
It's annoying, but it's also it is nice to kind of have a break from it. But
don't you remember when you were in high school or college or whatever, and they're everybody would talk about bankers' hours was a thing. And then now that you're in the financial markets, you're like, oh, this is what they're talking about, bankers' hours. So, I mean, there's that. But yeah, it's it is quite a bit. I will say that. So
again, I'm sorry to disappoint around the background, but tonight 7 p.m. we'll have the official.
It's coming. It's coming though, guys. It's just kind of like the teaser, right? But at least we get the living room shot, which is probably going to be a one and only, right? The only time that we'll get the living room shot. So we'll take that. I'll take that.
All right, so let's get into it. We'll be here for the next 2 hours. We'll take some tickers. Hope everyone's doing well. Let's start off with the S&P, and we're going to try to get through as many tickers as possible.
Sure.
But
let me go and share.
To set some context, this is the worst month of the year historically. Got a lot of people in the timeline getting pretty bearish. The equity risk premiums are starting to get a bit higher. We have rate cuts coming, which are supposed to be bullish, but technically they're actually kind of bearish. I mean, just in general, what are your thoughts, Jason? S&P's up 10% for the year, gave back 1% on August 31st or August 28th, but we still ended August up almost 4%. So how are you thinking of the S&P 500 right now?
Yeah, so I mean, I'll start with a super clean monthly chart, very high level. I mean, August we know is just kind of fraught with chop and volatility, more or less. I'm just gonna put a red line. I'm gonna look at the chat really quick. My screens have changed a bit, so if you guys can't see this, let me know now. I think this is okay. I've zoomed this in quite a bit in terms of the numbers, numbers on the side and stuff like that. So this red line is going to be July high, right? And then we're going to have essentially July low. So, and when I put a line on, it should show up here. So 639.85, 615.52.
Oh, dude, this is really good. This is way better. We can actually see the levels now. So this is perfect.
So, well, I'm zoomed out quite a bit. Again, this is a monthly time frame. So when I start to zoom in, it might get a little bit noisier. But again, so we are slightly green. So my candle settings, again, everyone's settings are a little bit different. This is just TradingView basics. It is a green month. The 639.85 is an important level. So moving forward in September, the candle of September, or the month of September, and I talk in candles, but the month of September will be red. More like the month will be red if we're below 639.85, but we're really not in a big drawdown until we're below 615.52. So that's how I'm going to look at it. As I step down into the weekly, this is the weekly time frame now. So again, you can see this pretty clear, right? So last week we'll do this just one more step down. And I'm going to use.
Jason, I think if you make the lines a little brighter, it'll also be easier to see. Maybe like
Let me actually make them thicker.
Thicker is better. Yeah, there you go.
Here you go. So what did I just do? 3x.
Yeah, that's perfect. Yep.
So the white here, that's last week. So what happens? And we talked about this concept a couple weeks ago of what we call in trading a look above and fail. And a look above and fail is when you start to go up and then you go down. Sorry, you go up and then you cannot continue higher. When you're an investor, you think of this as like a failed move to the downside, or what you might think of as a look. What do you call this in investing? It's like you're dip buy. It's like you got the dip, it goes down, but it's the opposite when it's going up. It's very similar to that, but inverse. So if I flip this upside down, the chart, I just inverse the chart entirely. You look at this and you might be like, oh, okay, this actually starts to look interesting. But this is the initial setup. When you look at this, it's like, okay, coming into September, this moment here is like, well, maybe this is the concern, right? That little initial week, which was last week. So if we can't get beyond last week's high, look, the truth is that in this moment, and I'm going to make that yellow, 649.48, we're not, in fact, going higher. And I'll put this back to where it is, 649.50. That has to continue. It's very straightforward. Look, if we make new highs, we're going higher. That's all it is. And in the meantime, this red line, 639, look, we can come back down. In fact, we can come back down to last week's low. And in trading, we call this pathing. The pathing can look like this. And a pullback to something like that, perfectly normal. Again, blue line is last week's low. That's decent. So moving forward, I'd like to see that hold. In fact, though, if we do come down lower, this blue line, which is last week's low, can end up serving as like a flip point. So 632 in change, 633 is going to be our pivot. If we're below that, then we are very likely going to about 615, which is going to be last month's low, give or take. Let me make that somehow got thinner, of 615, which is June low. And that would be about where we should land for September if we lose the 630 mark. So it's about 15 points of a pullback in this instance.
Does your gut tell you, as someone who's been trading Septembers for like the past 3 decades, that we're probably going to give back a decent chunk of August gains, or how are you kind of thinking of it?
The way that it's setting up right now, and I'm getting in a little bit deeper here. I just moved this to a daily chart. Sorry. My gut here is that I've now turned on our simple moving averages also, and I've also dropped down into a daily chart, and I've turned on our volume profile. So I'm getting a little bit more granular, one step at a time. My gut here is that now you can see this white line is our 20-day simple moving average, and I'll turn that up a little bit more. And as long as we're holding that specific one, I think that we are okay. We have a lot of fundamentals that are coming in the very near future, meaning Friday, non-farm payrolls, and then right behind that, FOMC and the rate cuts, or so to speak, rate cuts, potential rate cuts. I think what everybody should know is that technical analysis is good. And there's a study, and the study of technical analysis is centered around what's called the efficient market thesis, where the charts basically tell you that everything is priced in and you don't have to really pay attention to news. But at the end of the day, fundamentals are in fact greater than technicals. And so any fundamental event will throw your TA out the window. Hence, Trump tweets are greater than my charts. Hence, liquidation day, liberation day, whatever. So we have to be on our toes at the same time. We have to know that, hey, look, I might have a great chart setup and things might be happening like this. But in the next 2 to 4 weeks, there are a lot of catalysts on deck that can create a lot of, I'll say, volatility. And so this entire thing can actually play out in a moment's notice, where something like this could also be very true, where all of this could happen to the downside. Let's say non-farm payrolls comes in, or let's say non-farm payrolls comes in and we have this. And then at the same time, we lose it. And then FOMC happens, something like that. And then all of a sudden, so where this lands me, not to be too wishy-washy for you, 615 is our lower end of the range for now. And then if we can hold substantially over 650, then our uptrend is fully intact and it's all good.
And this is what happened last year. Like the first Friday of September, it was a 4% down day on the S&P. It was one of the worst days in like 10 years for September. Yeah. And we ended up recovering.
That's exactly what this is. Oddly enough, 4.7%.
Yeah.
So
it's just last year we didn't have an August that was as good as we had. However, we did have a August recovery from the yen carry trade that was pretty good.
Yeah, I'm going to tie in fundamentals. Just one more piece of fundamentals to add this, and you guys, I talk about this non-farm payroll thing quite a bit. And so the August non-farm payroll range. So when I use fundamentals to tie into my technical analysis, it's not a normal thing. It's specific to me in my trading. But if we reprice for some reason, if we reprice the market back to August, that puts us at a 619 low, which is right around that 615 area. So if the market decides that if we're valued too high from a PE perspective overall, and we need to be repriced, 620 is about the low end of that fundamental range, and we're repricing the market back to where we were in August. If this low end around 620, I believe that would be the low end range. If for whatever reason something really changes, the 200-day simple and 595, this would be like craziness. I have no idea what could possibly fundamentally change here, but this is the lowest end of support. There would have to be multiple catalysts for this to happen, but this is deep discount. This is the market being repriced back to February, June.
That would be a J Powell gets fired or something crazy. Like
that's exactly what that would be. So, moving forward, if you want deeper discounts, that's what this would be. Typically, when we do lose, if we were to lose the 20-day simple moving average, this is going to line up really to that entire trajectory at some point down the road. if we continue to keep that trajectory. If we do lose this, the 20-day simple, that is going to line up with that 639 level anyways, which puts us on trajectory to 615. If that 615 does not hold, well, in fact, it does put us on trajectory one more leg lower eventually for that 600-ish round number and the 200-day simple moving average, which would be an overextension near term and repricing the market back to basically pulling this year's. That would be way beyond whatever, but the first level, like I said, it would be 615, somewhere in here, 615 to 620.
Okay, so before we get into individual stocks, I want to spend 5 minutes real quick on silver and gold, because these guys are hitting all-time highs. If we could start with silver, and we could see kind of what's going on.
You want to look at futures, or we can look at the ticker
ETF?
ETF?
Yeah, SLV is fine. But I want some of your macro, and guys, we'll get into individual tickers in like 5 minutes. Macro thoughts here, technical thoughts here, and do you think these are breaking out from like a 11-year base officially to all-time highs?
So I'll start backwards. So do I think they're breaking out from an 11-year base? Yes. Silver has a higher beta than gold, so it will move second typically to gold. Macro, silver has more of a use case than gold, or has a different use case than gold in general. Gold is more like the safe haven, almost scarcity, not quite, but sometimes people will tie in the silver thesis into like its use case inside of, let's say, like semiconductors, things like that. I don't know how applicable that is today, but it has been a thing historically. Where's my, I'm on extensions right now. So I actually, because it's a you asked about 10-year plus, this chart is actually from a multi-month. So I'm now at a monthly time scale. And remember, if you watch this segment, all of my simple moving averages, I might be switching between time frames on my charts. I just switched to a monthly time frame. Just know that when my simple moving averages are here, these do not change. These are always daily. So even though I'm looking at a monthly chart, this is a 200-day, this is a 50-day, this is a 20-day. It's not changing with the chart. This is a consolidation break of this 29 area. I would almost prefer to use silver futures, but this is what we're doing. I've just took this consolidation here, and we're barely at the first extension. So 37.65 on the ETF SLV for this little blip in the radar. That said, you've probably seen this very long-term, and I'll take all SMAs off, this very long-term setup in the past. Again, this is a monthly chart. This is going back to 2011, and albeit this is the great silver squeeze. You can look this up in the history books. It is in the history books. You may not say that this is real, because in the history books, this was kind of suspect because there was a lot of market manipulation going on back here, if you're not familiar with it. But technically speaking, this red line I just drew, this 34 level, that's a big break.
Is that a bullish break, or is this kind of like?
Oh yeah, it's a bullish break. And where we've just landed 36s is actually the first target of that. So to press the bet in this moment, it is extended. It's at your first target. If it does go, the next target would be roughly into the 39s, which is going to line up with a bit of another extension. Although it's in an active breakout literally this moment. I'm going to switch over to silver futures. SI is the ticker for that. Your overnight gap literally right now is from 40 to 41.50. So, I mean, you're chasing in this actual moment. So,
Do you personally think the fear of September is why people are rushing into commodities? Like, because why else would silver be and gold, right?
so when you think about commodities in general, you typically also reference the dollar index, which is we call the Dixie, DXY. Yeah. And so fundamentally, in trading, I'll try and make this as quick as possible. All assets in the US market are denominated in dollars. All assets in the US market are denominated in US dollars. Whether that's a stock or a commodity, doesn't really matter. If the value, if what we're trading is denominated in US dollars and the value of that denomination of the dollar is coming down, well, from a very myopic or very short-term view, well, then the quantity of dollars that's required to purchase that asset should go up, right?
Yeah.
And that is the near term. I say myopic, but like that is the near term movement that you'll see. So a lot of times you'll see that inverse relationship: dollar down, gold, commodities up. So dollar down, recent. This also near term, dollar down, US equities up, right. Near term. If you go in more macro, there's other things that you need to consider, but like I said, why I was very explicit to say near term view.
Would you personally use silver or gold as a hedge right now, or you think it's kind of just, if you're in
the thing with silver is that back into 2011, you really need to look it up. It's probably too long to really get into the weeds in this stream. It would take too long. You can have a whole show dedicated to this, dude. Is that there was a lot of market manipulation. I have a good chunk of bullion. I'll just say that. The ECF itself, I don't own a lot of, but I do have a good chunk of bullion in safes at home. So I do, and I like it. It's cool to have. So as a hedge, it has a place in specific markets, in specific. Do you know the quadrants like Goldilocks, disinflation, inflation, and stagflation? In a stagflationary environment, there is but one trade, and that is commodities. And so when you hear about stagflationary concerns, you should immediately go to gold as your and I'm going to transition here to gold. You should immediately go to gold as your first thought, right? So when people start talking about stagflation, and you could probably talk to your audience about what stagflation is either now or in a later show, but in a stagflationary environment, gold is the primary trade. And in that environment, it's not a one and done. It's not a trade. It is more of a cycle. So stagflation it's a year plus, two plus year cycle usually.
So maybe the argument is we are cutting rates into basically 3% inflation, and the market's a little worried about stagflation. Maybe
that's exactly correct, right? And so you will see that, right? At the same time, the dollar is weakening. So and also at the same time, we will come back here. This, unlike the silver chart, which has not broken out, this chart I have been watching and active in since 2011. So remember, silver has not broken out of its 2011 high. I mentioned market manipulation, all of that, and not to necessarily put too much into that. Gold, whole different deal. You betcha. You want to look at the most bullish charts in the market. here you go. This is definitively the most bullish chart, long-term, short-term, whatever, that you can find in the market. So yeah, it is a multi-year. Don't like, do not, I mean, it is what it is.
Bro, if gold and silver end up being the trades of September and the S&P falls like 5%, it would be annoying, but like that's kind of what the market is signaling, at least today on September 1st. You know?
Yeah. So, I mean, people balk at the gold trade, but you can't like look at my screen and you're like, wow. I think it maybe they don't see the forest through the trees because possibly they're zoomed in a little too much. But when you zoom out and you really look, I mean, did you know that it looked like this? I mean, the audience may or may not have known that it looked like this, but this is in fact what the gold chart looks like. This is not even that. This has been playing out for a very long time. It's just continuation after continuation. We look at Robinhood charts, we look at Palantir charts. This is exactly that, but actually on a much larger time perspective, right? This is a 10-year long base. This is your 10-year cup and handle, dude.
Literally.
This is literally a 10-year long cup and handle, and that's what you get. That said, to me, my targets were in fact acquired on this guy. And so now we're kind of just like, we're continuing higher. So I guess 3,500 or 350 would be the next, would be the next piece. But here you go. So yeah, 357 on GLD here. But you're right into this first piece. So I think it is, yes, the 10-year breakout. But at this point, you do have to start to zoom in and say, look, here we are. We have traversed this last section, and I'm dropping down to the daily, and we're now sitting in. And I'll teach I have, not to get too far in the weeds, but there is a little trick when it comes to gold. It's a volatility trick that'll tell you when it's about to break out. I will say that it looks constructive, but I don't actually have the hard signal that says gold is ready to roll. The chart says that it's ready to roll, but but I don't know that it's legitimately going to explode to 360 just yet.
Well, also, it tried to break out back in April with Liberation Day, but then equities reversed, gold fell. So, I mean, I don't know. If equities fall, I could see it going up. But then if they just reverse, as you said when you were doing the TA on SPY, maybe gold tops out at like 350, 360.
Yeah, well, I'd say like, so in this instance, it's looking more like 330s, and then it could stay in this channel. So unless you get a significant push, it looks more like this. It looks like it could get a push up into the 330s, but if it doesn't hold above that 330 level, it's probably not going to 336, and it could fail back into that range and just kind of consolidate in here for a little while. So that said, it's I don't know. We can go into the next ticker, or we can call it. Okay.
All right. So let's do this before the tickers, because I think this one is on everyone's mind. Ethereum and then BMNR with it. So what do you think of it? And then what do you think of BMNR?
Oh, what happened to my?
Yeah, we'll do ETH, we'll do BMNR, and then we'll get into all the other ticker guys. 7 p.m. tonight, we'll have the official future stream with the new background, studio, all that stuff. But we're just doing some technicals here in the afternoon. Yes, Steve is very bullish ETH. That is correct.
White Steve.
Everyone is bullish ETH, bro, which is also kind of a little scary. But then it's also like, I think a lot of people are kind of bearish ETH and they think it's like a top indicator. And like this whole BMNR ETH treasury is a top indicator, which to me is kind of bullish because everyone's shitting on it right now.
So for the chat though, by the way, when the other Steve, if I'm Asian Steve, then the other Steve has to be white Steve. So, right. That's fair, isn't it?
Yes, that is fair.
I think. I'll assume the label, but let's keep it fair. Anyways,
we can call him Italian mob boss Steve. All right, ETH. Are we going to 5,000?
Caucasian. Anyways, Milky Steve. All right, so 2 levels to point out. So number 1, so 48, 68. That was, we're gonna call this 2021 all-time high. 2021 all-time high. And then this is 20 November. And this is May.
Yeah, Milky Steve is the new name, bro.
Hey.
That is his name. Yeah, Milky's better than Caucasian, dude. That's funny.
It's just white.
It's just white.
Just white, Steve.
So November was 48. We hit 49.50. So we did hit above that.
So just looking at the chart just as is, I think you can tell just horizontal line straight across, nothing else. These are very clear. We're going to call them pivot points on the chart. So obviously, once I draw these, you can see very clearly, look, this is a trouble spot, right? This is critical, 48.68, this November 2021 all-time high. And then here now, we are toying with this prior 2021, like May all-time high. This is like January, February, March, April, May, Q2 and Q4 all-time highs. This here, this is a big spot as well. So we'll call it, what do we want to call it? Like 2024. And this kind of like logic, if you will, you do want to use this very typically, like when you're doing your charts, just kind of highlight, hey, look, these are spots. Actually, I even might be able to say, hey, look, this is almost like even more important because I have a couple of these. So I'd say this is a bit of a range that's looking like around 4,000 roughly. And I don't want to be, so support and resistance, they're not like hard lines in the sand. They can kind of breach through and act like little trampolines, right? Like it's not like, oh, I need to stop, as you see. And then now that we're zooming in a little bit lower, this is what that looks like. And you're like, huh, okay. So this was that initial kind of liquidity grab right in here. And it's an interesting look. And then when we talk about our trend count meaning like, is this a higher high? So actually, yeah, it's a higher high. That's good. I'd say this is good. Let me just make this good. Green. Trend count. Is this a higher low from here? Yep.
Yeah.
Is this a higher high from here? Do I have this whole structure intact? Well, I kind of do. So I need to make sure that all of this continues to be intact. And so while this might and this is where trend lines come in, I need to see that this series of higher highs and higher lows can continue. I'm not a big trend line guy because look, if you want to be really overly precise, I don't want to be overly precise because then I can get into the weeds of like, well, I'm going to finagle these lines and make it look like, hey, look, this is broken down. Well, it's possible, but where can a higher low be? If this was my higher low, this can actually come down all the way down to 4,200. As long as it's not breaching this area, then I'm technically okay. And even if it does breach this area, that's fine. What's likely to happen is, and I'll just draw this, a real confirmation. What does a short look like is what I need to know. What does a reversal look like? A reversal is going to look like two things. I need a lower high, and then I actually need another thing called a lower low, and then I need another lower high. And so the pathing of a short actually needs to look like this, and then I have that, and then I have that, and then I have that. So there's some kind of, like, let's say time.
AKA you need to break 4,000 for you to feel.
Oh yeah. You do. So you have to break 4,000. And then, in fact, I need to lock also a lower high, which will likely be below this May. And we talked regarding Tesla, the concept of a lifeline. This, in fact, could be that moment of this is where it's going to probably look bullish for a second because you're getting back over. But if you do lock in that lower high, this is that moment where you're probably going to have to be like, okay, I need to really think about this. Is this going to happen? A good setup here would be like this. That's all systems go. This is all systems go. And in that instance, what this will be, like this whole scenario will just be nothing but a little blip in the radar and liquidity grab, because all of a sudden I'll just have another higher low. But at that point, I must have a higher high, and then I must resume trend like this for that confirmation. Similar to how we were talking about Palantir. Yeah, I could get a bounce, but then I have to have that continuation of trend to get my quote unquote confirmation. This is trading though, right? Not investing. This is trading stuff. So
one thing on the fundamentals real quick on ETH, Tom Lee shared this over the weekend. The stable coin supply on Ethereum has now surpassed 160 billion, which is doubled since January 2024. So there is obviously demand on the network that is increasing with something like stablecoin, which is one of many different use cases for Ethereum. Question is, will the price cooperate and showcase that value based on some of the fundamentals?
Yeah. So if the price does not cooperate, where does real support come in? Real support does not really come in until, so that's if the trend continues, that's what that has to look like. If the trend breaks down, then you're going to know below 4,000, right? If the trend breaks down, then your real support comes in below 3,000. And that's at this red box right in here. So this is like your real heavy deep buy, like just so you know. And in this instance, I'll just take our basic measurement and right in this area, and we'll call this here, this area around 3,200. That's going to be your 50% pullback roughly.
If S&P goes down to 600, as you said, kind of like nightmare scenario, you think ETH is around 34, 35?
It would be like this. It would be like, so knowing crypto, having been in the space for so long, it would be a flash crash. And unless you were up at 2 a.m, you probably wouldn't even notice it, dude. It would be there for like 2 seconds.
Yeah.
I got to be honest with you. Yeah, unless you're sitting there staring at the charts, these things usually happen in like minutes. At least in the crypto space, because I'll tell you what, if it does happen, the thing with crypto is that there's no circuit breakers to stop this. And you know, it just whoosh, and then everybody's sitting there like they get their alerts on their phone, they open up their apps and like buy. If that happens, you'll be texting me, I'm buying. and like everybody will be texting everybody because like if a flash crash happens like that, yeah.
I think the treasuries would be happy too if they can get ETH at anywhere near those prices.
Probably. Yeah. I mean, in the near term, a very basic dip, which is to me like not even that big of a deal, is going to be in the 36s.
Yeah.
A very basic.
Okay. Then quick thoughts on BMNR, and then we'll move on to the other topics.
Yeah, 36s to me is not super juicy, but so BMNR I think is fine. It's been really this area right here. It's like 38s. This is that initial support that was built here, and then this. It's always been like this. This is that shelf offering that was done here. Shelf offering, instantly bought up. I don't know what was going on here. It's probably just sentiment. So again, why sentiment matters overall. But at this $70 level, this is also a critical pivot. I'm just going to put this down to here. Right here. And these are wicks. So at the 70 level, in even historical price point from way back when, this was a trouble spot. And so as I was looking at this, as it was coming through, this is clearly, to me clearly, but the charts now on this chart, you might be able to see it a little bit better. This is the current trouble spot. And so as long as BMNR cannot hold a full couple days, multiple days, let's say, over this area, and you can even see it just the intraday spots. We've yet to get a full day's trade. And what I mean by that is like, I want to see an entire day's candle open above and close above. And I quite frankly, I want to see more than a single day. Like I want to see at least like, I want to see like, you could wick around, right? But I would like to see like a few days like this. That's fine. I would like to see 1, 2, 3, 4, something like that, days closing over this $67, $67.50 price level. Over here, we have 1 day close above. We have 2 days. We have 2 days closing above, but never a full day's trade. So like a full day's trade above looks like this right here. That's a full day's trading above, right? Yeah. Even this, like it could be, you know, a day above, but it ends up having like a giant wick above. Anyways, and it's not super strong, but if I got at least like a third day closing above like that, and then I could get a couple days like this in this kind of order, but it's really like, hey, look, the second we get an entire day's trade or two, like fully above, even if it was some kind of series like this, but it's this level, is that 67.5 level. But I need to have I need to have more conviction over that. And then I know definitively it's ready. In the meantime, look, we're way below that. So what am I talking about this for? The reason I'm talking about that is because that puts this in a pretty clear trading range. And I know that, hey, look, near this level, I need to know that this is not in breakout territory until it's over that. And so I don't, trade location matters. I don't want to be buying up here thinking that it's going to be breaking out. If the market overall is in transition, meaning that the market's not necessarily ready to break out, I don't want to be buying at resistance. And I think that's, right. This is the transition that people are, I believe some might be struggling with now. We've been in a bull market for so long people are used to thinking that we're breaking out, and they've been rewarded for the last few years by buying at resistance. In fact, it's not necessarily the best idea to do because things look so strong. The better thing to do is to buy at support. And support, in fact, is down here. We're close to, but not quite. We're close-ish. So support here. It's just a range. So it's not a hard line in the sand, but it is this general range. We had here a weak support at 48. This is weak, meaning only a few days. 1 day, 2 days, 3, 4, 5 days. We attempted to create support around 48, 47. It didn't happen, right? We know the much stronger level of support is at 38, 39. So this support level did not hold. It was not fully vetted. It was a weak level of support. So in the meantime, this was prior resistance. The question now is, does this prior resistance become future support? That would be ideal. But the truth of the matter is that the real support is at 38. So I'm not acting here. If that fails, cool, we go here. If in fact this happens, that is ideal. So best trade location right now, if you're going to add, is here, 38s. If you want to wait and be more comfortable, it's actually probably one of these two spots. And I might be more inclined to wait and see it recover
and
here.
Their NAV right now is 40. I think they bought more ETH, so call it 41, 42. So if it does fall to 39, theoretically,
then you're at a discount.
Yeah, you should be at your discount. Yeah.
And Tom said that he's not going to raise, or he's not going to do a shelf offering if they're trading below NAV.
Yeah, he would be buying back his shares of that. So that kind of gives it a floor unless the bottom falls out on ETH. And then,
which is the risk that
Yeah.
Okay. So then from a fundamental perspective, based on what you're saying, then, fundamentally there's no risk of a shelf offering below NAV aside from just the general risk of Ethereum falling.
Exactly. Yeah. And again, I personally like selling call. If this is going to be range bound between 40 and 50, I think the call premiums are exceptional. So there is a world where you can generate some income off this. Okay, NVIDIA, what are we thinking on this bad boy that got destroyed after what I thought was a good earnings?
Semis as a whole, well, the market is forward-looking. That's all we can say. The market values stocks based on what they see is to come in about, generally speaking, 2 years, right? The market likes to value things forward about 2 years, roughly. So it's like, simplest terms, what do I have to look forward to? The great Micron quote: "We're sold out for the next 2 years. Stock plummets. How much?
Like 30%.
Yeah, the worst thing you could ever say on a conference call.
That was hilarious. They're like, we're sold out for the next year and a half. Stocks down 30.
Yeah, but that is how stocks work. If they can't see a definitive, what can you do for me in the next 2 years? Why are they holding? And if it's not something new, then it might be priced in. And on the call too, I felt bad for Jensen. I'm sure a lot of people, you probably felt bad for Jensen. That guy was repeating himself. He almost sounded a little frustrated, because it was like the same storyline, right? And the analysts kept asking the same questions, which is stupid. But this is, so you're in between your two simple moving averages. I don't know why this thing is. I'm trying to update this. So
I think the most exciting thing about that call was that they are guiding for China revenue, but without China revenue, it's still a lot of growth. If you include China revenue growing at what Jensen said it could be growing at, they're going to do $8 of EPS in the next year and a half, which means it's trading at 25 times, which is incredibly cheap. If you think China is going to work out. So I think the call was good enough to give investors enough hope, as you said, right? Markets are forward looking. What's the hope that they should be looking for? It's China being a $50 billion opportunity, growing at 50%. But if there is no China, it's still a great company. It's just, does it deserve to go to 220 overnight? Probably not without China.
Yeah. So futures are not open right now. This is what I mean. The stuff like Trump tariffs being illegal, that could be market moving. And we'll have to see what happens tomorrow and how the market digests things like that. That's going to be a big deal. In the meantime, here's our level. This is about 173. This was prior support. This is a big deal. So as long as this area holds, which it's being tested once, well, I'll just use a different tool. One time, two, and kind of broke through, but reclaimed. 3, 4. This is a lot of times to get tested. So that's the concern. You knock on the door so many times, eventually it'll break. That's kind of the saying. Support is not a hard line in the sand. It is in fact that trampoline. So yeah, it can. This is the trampoline, right? Go through and then bounce right back up. It's like that beach ball underwater. Poof, comes back up. So it's not a hard line in the sand. The question is, yeah, it can come back and even pop up like this, and this becomes that range. So for now, low end of this range is the 160, like low 170s, high 160s, essentially that 50-day simple moving average. But using that trampoline metaphor for just a minute, if the trampoline were to extend too far, and it could just snap, and that snap would look like this, poof, and you just fall right through. And so that would look like this. And back to that Ethereum chart example, the pathing to get there, it would attempt to bounce. It really would. But that bounce would lock you in with what we're going to call a lower high. And it would look a little bit something like this. I can take this chart setup and you can just generally see that, hey, look, these simple moving averages are, the angle of these are starting to flatten out. So the momentum we know is, I say we know, the momentum is coming down. It's going a little bit sideways. These lines on my screen, by the way, these are automated candles, just like I started with on SPY. The yellow line is last month's candle. The red lines are quarterly candles and the blue lines are weekly candles. I do that on purpose. So this is July. So this is July monthly range. So right now, and you probably can't see, this is the weekly range is 168. So that's last week's low right here, that 168. And this is last month's low, 151. So that exercise, if you will, that I did with SPY, I do that every day, or like with every single ticker, exactly that. And I think it's important to note that that's exactly what I do. And the setup is nearly identical to SPY, where, there was a very small blip of an attempt to go higher. But let me remove my lines for just a second, and I'll just put these blue, yellow levels here, and I'll take these arrows away so they're not on this side of the screen. And it leaves you with 182, 168, 183, and 151. Essentially, if you lose this 168, which is last week's low, that's the point at which your trampoline of support has snapped, and you are likely to see somewhere around that 150 area as your September support. But as long as that 168 or high 160s is holding, well, you have a decent probability of traversing, at least in this range, up to 180s. But you're still not going higher unless you're definitively over, let's say, 185.
Can we do AMD? Because I imagine it would be similar.
I believe it's similar. There are some charts that look pretty bearish that I could. It's exactly the same. So exactly the same on this one. The low end is 133. So same exact exercise, 133. Is this helpful for the chat? I'm just gonna chat. Tell me if this is helpful.
No, I like that you're giving the range.
133 is the low end. It's got to break over 188. The near term support for this now, for let's say September, oops, wrong color, 158s. So if you lose 158s, then your downside support is going to be in the 133s.
Can you do MRVL real quick? A lot of people are
Dude, I really don't. Can I skip it? It makes me cry. Okay, but
you and Jose both like this name.
Okay.
And then the earnings just like, it was weird. It was
well, so they lost Microsoft. We kind of knew, so I was worried about MRVL, not gonna lie. This is a perfect example of
he still loves it though. He still thinks it's a top 7 pick.
Oh no, so my thesis, so the thesis on MRVL is that the company is in transition mode anyways. It's an old 5G stock. Let's be real. It's a 5G stock, and they're selling off business units to, so they're cutting off parts of their old like business. They're cutting off their arm to build a new leg, right? So the revenue looks funky. And I think that the stock market understands that, but at the same time, it's like, we wanted to see the leg grow faster, right? And in the meantime, look, they're trying to shift the whole company, and this new leg is really, this is a stupid analogy. I'm really sorry, guys, but like, it's not growing as fast as they wanted to. And, you know, maybe it started to really bad analogy, but like, Microsoft like veered on them. I think they lost Microsoft for a bit, but it's a transition that is not going to happen overnight. And they did have some stumbles along the way, but it's not an overnight thing. This is like a years long thing.
Jose's argument was that every AI company that's having massive growth, MRVL's just not showing that yet. And that's why the street.
Yeah. But in the midst of that, it's a giant. Yes, the only thing I'm adding to that is that in addition to that, it's a giant transition as an organization for MRVL, coming from a 5G company. They're doing away with their auto, doing away with like their cell phone. They call it consumer division, doing like cell phone stuff and car stuff. That's not really profitable, but it's core to their business, and shifting into data centers, which really wasn't a big part of their business before in design, right? And so it's new business for them. And the fact that it was probably one of their best quarters is good, but the market wanted better. So, and in the midst of that, they did have some struggles with Microsoft, which is a big deal. So,
wait, so are you buying the dip or no?
I think that semis in general were a little bit overheated. I think you have to wait on this. So MRVL has lost that monthly low. This purple line is a 200-week simple moving average. I have to add one level here, and that is the quarterly low on MRVL, which is a 3-month low. I think you're okay, but 60 is that next level. I don't want to go out and like instantly do it. There's a little bit of a trick where if I were to say, hey, is this the absolute low? I'm not going to sell. And I don't want to like jump in front of a falling knife. It was a huge dumpster fire. It is what it is, dude. But I guess if I needed some losses, the thing is, like, I'm in a funky place in the portfolio now. If I needed to harvest some losses, which I might, I could sell. But if I sell this just to harvest some losses, there's a pot, and we're going to come into that point in the year. I don't know if we're going to talk about that. This is one where a lot of people might be looking at this. And as we get into September, there are going to be loss harvesting going on, where MRVL might be one where it actually could get worse, because people might be looking at something like this and be like, oh, this is a beautiful loss harvester. I mean, it's a beautiful loss harvester for somebody like me, where like I could just take this and like rip it off. But that means I can't buy it back for a while, right? Like I can't buy it back for like 30 days or whatever it is. Because I don't really want, like, if I want to buy something in the near term, I might have to take profit on hood, which sucks, because you're going to have really massive short-term gains selling Palantir or selling hood right here if you have a new opportunity come about. And that's a big deal to swallow.
Speaking of hood, let's transition to that.
Oh, okay.
What do you think about hoodie?
Right. Last we talked, I said ill-advised to press like aggressive longs. It was because very similar. We really couldn't break through this 120. Also, good to note that stocks that get through 80 go to 120. Target acquired. Funny how that works, though, right? The unfortunate thing is that stocks that can't get through 120 tend to go back to 80. Yeah. But I would like to see this chop a bit. I really don't want to see this 50-day simple moving average get lost. Same exercise here as everything else. That weekly low is right here. It's 99. It's too weird. It's too much of a, I mean,
I think we get back to 80 if S&P goes down to like 6,000. But if S&P is like 620, 630, yeah, I think low 90s should be hopefully.
Well, so we're doing the same exercise here. It's 99 for whatever reason. That's last week's low. The last month's low is 89. So this is definitively our trading range for right now. Does it have to get exactly there? No. Can it stop at 90? Sure. But or 93? Am I going to care about $3? No. But I knew like, look, the second that it wasn't getting over last week's high, which was 117 or whatever it was, and when it failed essentially last month's low over here, 113, the second that this happened, and we already locked in a lower high, remember here. This is already our lower high. We already have a lower high here. And we've already lost the 20-day, and these SMAs are going flat. I think this becomes kind of your trading range, sideways action, until we're over 120. And if we can get over 120, it's all good. But this would be sideways for right now, unless, of course, this whole thing gets lost. And if that 90, 89-ish area gets lost, then that becomes pretty unfortunate, because the next real level of support isn't found until we get down here, which is in the $70, $75 range. But from a technical perspective, I got to get down to this quarterly low again. Something really funky would have to happen. But I'll tell you what, football season starts on the 4th. College football is here. This stuff's about to get wild. But anyways, I love hoodie. And again, the thing is, like, do I want to take I'm at a crossroads here. This is like I can see, hey, look, we're already a bit at risk. Even if you were to, as anybody else who owns Robinhood here, it's like, here's the thing. Would you even want to sell anything up here just to buy it here and possibly get that? Like, is that even worth your time? Do you know how much tax you would have to like assume to do this? That's actually in my mind right now. It's like, okay, that's a lot of tax. 35% discount. Like, that's a lot of tax. Cause like, I'm never going to see this again.
Yeah. And for Hoodie to drop 35% from here as well, like you need something. I feel like it can't just be S&P's down a couple percentage points. I mean, that's erasing a lot of
okay. So fintech can do this. Let's say my point is like, I would have to take 1,000% profit, short-term gains, basically. like, I mean, okay, if you bought this within the last year, you probably have a $40 average within the last year, right? Yeah. You're not seeing $40 this year. It's not, I don't see how that's happening. I mean, what are you going to do? You're going to book profits. You're going to book, you're going to book 100% gains short-term, pay whatever your tax bracket is so that maybe, I'm sorry, I'm going on a rant. We can move on. So
maybe for it to fall, and then not to mention you have like 4 or 5 catalysts, not to mention S&P, which
and Hood month, so that maybe, just maybe I don't. And then what if I don't? What if I don't? What if I do buy? What if I end up like front running it and I buy? This is the worst fear. What if I end up buying it here? What if I end up buying it here and then it does go down there, and then I sell it out of fear and book a loss, like which by the way would be a wash sale, and you can't book that loss. It just gets really bad. That's anyways.
So the argument here is you would hold the course even through a drawdown, and I guess the best hedge is either buying some puts or selling some calls. Essentially,
probably selling some calls, yeah, or like very small. No, I mean, if you want to book, because the thing is, like, if you do sell it to avoid wash sales, look, you really can't buy it back for, well, I'm sorry, I'm talking investor now, because you guys probably know by now, I don't really trade Hood. It's mostly a investment position. I'll book sub, but but what I book, I can't think about, unless you are a professional trader, you can't really think about buying within a certain time frame unless you understand that you're going to be having a wash sale, and you can't.
Yeah. Okay. So core thing is kind of hold the course even if it goes down. Palantir. What are we thinking about this one? RBB last week said 130. It's down from 190.
It's the same exact thing. Like, I look at this and like you gave me, you said something to me. It's like, well, it depends on your time frame and depends on what we're talking about. It's a tough show for me, especially for stocks like these, because on one side of the coin, I have, the investor hat, and then the other side of the coin, you have your trading hat on. And I'm getting a little bit mixed up right now because you have two completely different, unrelated, these are oil and water thought processes. So trying to address both. So trading wise, Robinhood, for sure, it can come down maybe to 99. And if it fails that, it could get a little bit worse. There has to be some kind of catalyst in the market. Palantir, we did this trajectory last time I was here, same thing. And the thing was, hey, look, we can get down here. We did get down here, which, by the way, ends up being that weekly low. And at the same time, we said, look, the issue is if you do get up here, you must be aware that this could in fact be a lower high, and you must be cautious because you're not in the clear unless you're over this 161. One day above, but instantly the next day below. You're not in the clear here. You are at risk, but you're not down, right? So this though is not super strong here. It's getting a little tired. You're sitting on the 50-day simple moving average. Can it still chop and eventually come out? For sure. But again, until you're over that 161, which is realistically that last month's high, that's where that comes from.
What does your gut say from Pounder?
My gut says that you're gonna need to follow the news. You gotta have to stay real close to this. There's gonna have to be some kind of catalyst that the market is not pricing in here now. Downside near term 129. So which is nothing but last month's low. And in this instance, 125 is that quarterly low. But again, these aren't, and you can see this on the volume profile right here, very similar. And I can even pull this out to here.
And while you're saying this, let me just say, and I've said this every day, but it's still important. Fundamentally, not technically, if Palantir falls to 129, it's still trading at a $300 billion market cap, which is very aggressive for even the growth they're putting up, right? So it's like, if it gets there, is it going to suck? 100%. But is this something that is unexplainable? Oh my God, how could Palantir go to one? Absolutely not. I mean, the valuation still would be very aggressive at 130.
Yeah, and so I'll even go back to this. It's like, okay, even if it came down to 65, just as an aside, like, okay, we're talking about me buying this at 65 in April. And so like, then here's the investor hat. If I sold it here, like, okay, what am I doing? I'm going to book this. This is like, you can, but, and I think this is so I live in California. I'll just say our tax bracket is like 52%.
Stupid.
Like that, and then if I want to spend,
how does anyone live in California? That is insane.
Total tax bracket, like between state and federal, that's coming in, and then spending money is like 12-13% going out. By the way, so like what is the point?
Yeah, if you bought it at 65 and you sell at 150 to buy it again at 130, it's like you'd rather just hold the course and sell some calls, right?
Mm-hmm. That's kind of where I'm at. It's like, well, which is why, there's the two hats, right? It's like, yeah, this looks like it could come down. It could, but you have to ask yourself, what basket of money am I talking about trading here? Am I talking about investing, or am I talking about trading? If I'm talking about trading, cool. Look, if we lose 150s, then next level 142. Is that tradable? Absolutely. If I lose 142, is it tradable to 130? Absolutely tradable, for sure. And then as an investor, if I want to pick up more, what I have to do is I have to wait for the stock to get a breather around here. And then if and only if I see life come back in, then cool. I can maybe see something like this, and everything else is still happening. And then it's all good. But if that doesn't happen, then I just have to be aware that, hey, look, we just have to wait and see what happens next once we get there, because that is the downside target if that happens. If it doesn't, by the way, I didn't even do this because upside is a possibility. If we get over 160 for Palantir, actually, we have a pretty clean upside target of 177, which is very much in the cards, by the way. So on this one, because we have a cleaner weekly range over 162, very tradable range 178, 177.
Okay. Guys, we got about 40 minutes left and then we'll be done. So let's get through as many tickers as we can. Tesla, what do you think about that one?
Still need to be patient. definitely. Tesla's in this bit of a kind of like consolidation, if you will. So let me just make this cleaner. So this is that series of higher lows, more or less. This one kind of breached a little bit, breached here, but then made a higher high, made another higher low, made another little higher high. And then right now we're sitting exactly on the 20-day and the 50-day. The setup is still there, but it's news heavy and it's not breaking out. Just make sure I have.
Yeah, I'll put I see a lot of the tickers, so I'll put the timers on as well. We'll try to do 5 minutes per ticker, guys. Okay. And then we still will have technical Tuesday. So if we don't get through everything on Tuesday, we'll still have time. So
there's this overhead consolidation. So 130 or 338 was the last time I talked about this. And that 338 comes from the monthly high. And that's right here. We were over it for a little bit, and then we came back in at the close yesterday, which may or may not end up being a retest. We're still over these SMAs, but again, this has been getting really choppy, holding this general trend. It's not super strong, but like I'm an options trader, this stuff. Anyways, this is tight. This is as tight can be. You just got to be patient. If it does come down, look, it can come back down and test all the way down into that 250 if this ends up completely breaking down. But completely breaking down, 288 is that low end of the month. The low end of the week is last week, 315. So we'll be here by tomorrow. So we'll see a better view tomorrow. So these lines just popped up, 341. 341. If we're over 341 next week, cool. 315 is the low end. Absolute disgustingness for the week if we're bad. If we're below 315, look, we're going to be at 288 for sure next month quickly. And that's this immediate near-term range. And then if we can get through this overhead supply, then yeah, it's on and cracking. But this is the overhead resistance that we're still dealing with that goes up to 365s, give or take.
Okay. SOFI.
So financials have been doing better. This is all about the rates right now. So the rates are high focus, 2502. That's that monthly high. That's just, we'll call it 25 for round numbers. It's holding. It's sitting on it, holding. If it loses that, and this is going to come down to Friday, non-farm payroll. If it loses that, it's 21, which is actually a really oddly wide range. And if we can continue just for the month, 30.
I don't think that's crazy.
Yeah, we're here. That 25 is that triple top previously. 28 is the all-time high. Looks like thereabouts. So I don't see a reason that we couldn't like just have a little overreach and kind of like touch for 30, but somewhere and land somewhere around 28.
Yeah.
Might be like a 30 or 29. I'm sorry, it's 29. 29 in the after hours. And then a little pullback. So I'm like, that's SOFI for you.
Rocket Lab.
Weekly. So weekly 47.18. Monthly is here 54. So that as long as it's holding that, then you see this here. I would need to do a weekly extension. That puts you, so as long as you can hold 50, so first step has to hold 47. Second step, your target is 53. If you can get through that, then you could start to talk about 60. If you lose 47, then your lower end of support is twofold. First, like deep is 38. But in the meantime, first stop is right where these bears were holding 42s. So I would say in here is your intermediate support, just above 40. Your deep support for the coming weeks, 38. But as long as it's holding 47, then you're in the uptrend. Target. And then otherwise a failure is here, there.
I like that this is held up from like 38, 39, which it like tested barely. Yeah. And then I don't know if it's going to break out back above, 53.40, but I like it at 45 to 50.
Yeah, by the way, so these levels, you could screenshot this or come back to these recordings. If at any point during the week these levels get reclaimed, they can easily turn into this, just so you know. But these are technical. This is technical session. So these are tradable levels throughout the month and throughout the weeks. Level to level is what we would say.
Yeah, and guys, because we're doing some of the major names today, because we're only doing a 2-hour session today, tomorrow we'll touch a lot of the more obscure, unknown names. And we won't have to like do all the basic ones that we're doing today. Let's do this one, even though I think it's kind of stuck, but grab. There's been a little fundamental controversy about grab that I'll talk about tomorrow. It has to do with some protests in Southeast Asia, but technical wise, what are you thinking about this?
I'm opening up my brokerage right now.
Why?
To buy some more. No.
I again, I do like that. It's kind of.
I'm opening my brokerage right now to buy some more.
The hype is dying down, and it's just flat.
It doesn't look stuck, dude. I like this setup. I like this, how tight this is. If I zoom in, I really like how tight this is. And I like that it's not US right now. I like emerging markets at the moment. I like China at the moment.
It's not China.
I know, but I said emerging markets. That
was as bad as me calling you Korean, bro.
No, I wasn't calling grab Chinese. I was not. I said I like China in general at the moment. I think there's a little rotation in general, and the rotation is just emerging markets in general. This sets up well, and it is going to fit within that theme. Side note: I usually want to use a daily chart for anything this low in price or higher. I think this is setting up for a bit of a squeeze. Oh yeah, sorry. For my oscillators, I just use a MACD, just a typical MACD. MACD histogram. I think you are very close to it. It's very close. Not a pattern trader.
Like the necessary breakout level.
What's that?
Is 550 a certain level that you would think needs to be a breakout? What indicates we're actually breaking out?
550 is like, this is foregone conclusion. This is the setup level right now. So like at 550, it's already happening. This is your quarterly high. Where we are at this moment in time is that so what I like about this on the daily is that you've tested the weekly low 1, 2, 3 times. And then when I drill into this, and you might not see this, but I do it. I'm going to make this white. That's yesterday's high, or not yesterday, last week's high. 1, 2. So this is Friday, Thursday, Wednesday highs, all here. And I think with this setup, that $5 level, I think that's going to be a pretty key launching spot. So if you can get a full day's trade over 5 in strength, like 510, like if you see 510, then I think you're actually going to see 526s in short order. And then if you can get through that 526 level, which is the weekly pivot, and if you can get it in strength, that is your next kind of pivot here. 526 coming from this order, like I'm going to say order block, but this resistance level. I don't want to be buying anymore at 526, 530. That's your resistance level. But if the momentum that's generated from 5 into 526, this area is enough to really propel it through here. And then the next thing I see is this. And if I see a cohort with the market sentiment liking emerging markets, and then I see this what was prior resistance turn into support, that's what I would need to see.
Right.
At that point, that's good. And then this, if that cracks through, well, that's the launching point, which means that this moment is a crucial moment from a price action perspective, which is why I was like looking, because we've already had higher low, higher low, higher low, higher low. Does that make sense?
Yeah.
So we've already had this trajectory, and this is that next kind of like launching pad level. It's all speculative, but the setup is there that could potentially build momentum from this basic stock chart, but market-wise sentiment, it's in the right sector. From a sentiment perspective, it's in a better sector now than it was 6 months ago when you brought it up.
Yeah.
Because of the overall market sentiment.
Agreed. Google.
I mean, it's done all right. Are your calls? I mean, I don't know.
They are basically break even now.
So I don't know where this goes. I think you're at all-time high. I'm still a little cautious. So I'm for sure cautious. So 208 is last week's high. We're going to open up tomorrow or whenever. You're going to have your future stream. 212.19 is Thursday's high. I'm really not going to be too concerned about Friday's high, but I do want to watch Thursday's high. So Thursday's high is 212.21. It's this white number here. That's going to be important for Google moving forward. If we lose that, then we do very likely come back to 208. If we like, that's almost like a foregone conclusion. And then we very likely see that 207, which is the all-time high. And this is setting up, unless we can hold that 212, this looks a little toppy. I would be very cautious. I have to see this trajectory. I have to see that trajectory for continuation. If I don't, I'll just tell you right now, this is actually at risk for a bigger pullback. And I know it's like the strongest stock in the market, but it is at risk for a near-term pullback here, which would be 207. And I'm thinking about taking my calls down in their entirety because I'm options here. I'm not going to trim equity or anything, but that's where I'm at on this one because it's been a good ride, at least for me. And I don't want to hang around I don't want to overstay my welcome. If I do get this, then I might roll into something else because I'm in the options box, but this would be a better sub 200 dip buy than trying to press this bet unless we have some kind of catalyst, which would come in the form of non-farm payrolls or FOMC, which is very possible.
Meta.
So Meta's doing exactly what I just kind of outlined would be possible for Google. It's already doing it. This is the monthly. So why is Meta so weak? What did you do?
Dude, it's giving back a decent chunk of its earnings pump, but you can't complain because it's up a lot still.
So my gut is telling me that Meta's ahead of the Google trajectory. So I might be more interested in going long Meta and short Google next week. If this is like the fast forward, right? Yeah. So like if Meta has done what Google might do, and then if Meta goes long, so see, this is that prior, so it's already there. So the weekly low here, 731. If this holds, and then 740, which is that prior high, I like this setup for Meta as a reclaim. Kablam. Of course, I would like to have some kind of news catalyst with that. And in that case, the upside 775 would be ideal. That said, how does this get invalidated? If it goes down, there's your low at 690s. And it is simply that right there. And that triggers below 731. It goes to 690. It's that clean on this.
Okay. IREN.
So I fumbled this one. So I mean, not fumble. I just didn't have the time to do any DD on this. I think a lot of you guys did. So congrats. I didn't really know like what they were doing. Last time I really looked at it, was like, hey, look, at 15, I think this trade is over to me. And from a technical perspective, like it was trade complete. And then there's this moment, meaning like there's more to the story. So this is why fundamentals matter. From a technical perspective, you actually got this push above. So you got a new high, and then you got a beautiful retest. But I had not, again, I didn't spend the time to really look into this. So that's my fault. And I think they do apparently have some special sauce. So that said, same exercise, always this exercise, by the way, monthly, weekly. Here you go. As long as you're over 22, you can stay in trajectory. That said, this is very overheated. And I mean, extremely overheated. I don't have any divergence or anything like that. So can it continue to stay overheated? Absolutely. But what does that need to look like? So for right now, that needs to hold 24.5, right? That's this guy right here. If it cannot, then 2180 has to hold as support. It can come down as high as here, but for the week, it must look like this. It must, which is fine. So it can come back as low as 2180. If it loses 2180, first level support, 1723, and then below that 1580. That's your prior pivot, double top here. That's a big level. But near term, 2180.
Okay. LYFT.
So the squeeze was off, and then it's looking back on-ish. Post earnings, which was weird because like it was all wackadoo, and then
you had some big names buy it as well on the 13Fs.
Did you? I missed that entirely.
Yeah, Bridgewater bought like 5 million shares. There's a couple other firms.
Really?
Yeah.
Oh, I'm a big fan of Bridgewater. Wow.
I mean, this one is obviously not lived up to like what Uber has been able to achieve, but I don't know if it deserves to be.
Is this just the buy low, sell high thesis? Do you want investing or trading here?
I mean, what's the trade if you see one?
Well, the trade has to be over 17.5, right? Over 17.5, you're over the 200-week SMA. Week, not day, week. And then you're in big breakout territory here. And then you're probably going to 19s to retest this general area. But that's a small blip on this large radar. because if it is in fact like the one investing, I don't even think that's started.
Well, put in the chat if you are buying LYFT as an investment, because I think most people that I talk to it's a trade for them, not a real like long-term thing. So yeah, I think it is a buy low, sell high argument. I mean, this thing was $9 a year and a half ago, so it has made somewhat of a move.
If it's a trade, though, I mean, it's still gonna be 2 to 3 year trade to 35, or a 3 to 5 year trade to 35 is what I'm like looking at.
Okay. ASML. Any thoughts on this one rebounding from like the 650s, even though it's still down from the 850s or 680s, not 650s?
That is a tough one. This is very range bound. Yeah, I mean, support's at sevens, roughly sevens, but it's it has to hold 730 this month. If it loses 730, you're probably going back to the like low sevens, and you could possibly breach that. Yeah, 730 has to hold. Otherwise, you deep low sevens, possibly high sixes. Again, back to the low lows. It's not out of the weeds until. Then I think this is a longer term. This one, I don't know if you trade it much. Like if you are trading it, yeah,
I feel like it's been a decent trading stock all year outside of the earnings dump, or at least since the earnings dump.
Yeah. I mean, I guess from that perspective, you have to go on a much smaller time frame.
Yeah.
So like 30-minute time frame, 740 up to 760. So like that's the range, right? 760 is your high end of the range, and then 730 is your range. So from that perspective, yeah, you sell at 760, you buy at 730, and that is the range. So it's a $30 range in the near term. What I was talking about, if you lose this, then you're going here.
Right.
And then if you do bounce here, then you go to there.
Right, and that becomes the range.
Yeah.
Rocket, RKT.
This could be this is interesting. I mean, this is the whole. This is a housing play essentially. A rate. It's a housing and rate play. I mean, around 14 was good. I don't think you sell this. I think this is. I don't think this is a trader. This is not a trade as much as it is an investment. I don't think you want to trade this. It's probably someone asking this from an investment perspective. I'm 90% sure this is somebody asking about. Whoever's asking about this, probably 3 to 5 year time horizon here. If you dip buys around like 16, if you see it like let's say if this rate whole theme comes to pass, and if we lose 17, 1590s. 1590s is like your dip buy in here, if you get it. For all intensive purposes, I think we hold exactly this level, roughly 17s near term, unless non-farm payrolls comes in hot. So like, I think that good news is bad and bad news is good for for Friday. We can talk about it more on Tuesday or tomorrow.
Dude, imagine we get like a 800,000 job revision or something crazy.
Do you agree on that thesis? Good news is bad and bad news is good.
We'll get 50 bips. We'll get 50
Well,
bits.
yeah. So if we have low jobs, then it's a better argument for rate cuts. And I think tomorrow we should talk about the 10-year possibly and how that affects maybe mortgage rates and things like that. But anyways, near term, this is your weekly low around the 17s. If you were able to get it sub 14 in the 13s, I think that was possibly the lows. And if you see it at 16, I think that's a good spot to start picking up this prior triple top here. Over 19, she's gone. But I think that remains to be the near term ceiling.
Okay. Before we do the next ticker, let me just link Jason's Twitter. Again, if you guys are not following him, most of you guys are, but you can follow him right here on Twitter. Again, he'll be live on Tech Tuesday tomorrow.
Yep.
And we'll get through some more tickers. CoreWeave. You're thinking of taking a stab at this one.
You are? Ooh. Sneaky little guy. This is a very interesting setup.
Well, the IPO lockup is done. I think the insider sold shares, and now it can breathe a little bit. Feels like.
So this is a very interesting setup. Sorry, I get a little excited there for a second. So this is the opposite of the look above and fail so far, right? So we saw this on UNH before we got the Buffett news. You're not out of the woods yet. Let me be crystal clear on that. It's not confirmed. When I do this, we have these monthly lows, 100 spot 80. I say spot, that's the point. And then we have the weekly levels, so 85 to 103.90, which we are not at. The green, I believe, is where the stupid thing closed. I say where it closed. So 103.91. Let's call it 104 for good measure. If we have CoreWeave trading over 104 next week, holding over 104, what that will mean is, in fact, this is a failure to go lower. And that's really good. It's not only a failure to go lower, it is also a successful movement higher from last week to this week, meaning that CoreWeave is green on the week, and it's also no longer red on the month. So from that perspective, it will be not red for the month of September, and it will be green from a week over week perspective. We call that a failed downward move, and you might call it like a liquidity grab or whatever, but it's a look below and fail. The opposite of a look above and fail. That's a pretty bullish. That's the most bullish that you can get. That's the best type of setup, but it's not out of the weeds yet. One day does not make a trend. That's how the saying goes. You can easily get that look above and fail on the weekly. So I have to drill down. We're going to drill down to a 30 or to a 3 hour. We can drill down into a 30 just in case. So this aside, the weekly near term is kind of more important at the moment. So you're chopping in the box. The box is between the weekly and the monthly levels. So it's interesting. It is at risk still. So you have, what's funky about this, you have a look above and fail on the week, and you have a look below and fail on the month. So this you want to step aside. I would wait till you're over the 20-day or 106, and then you have a very clean, very strong, very good directional upside move. Or I would wait till you're below 99, and then then this is going down, and it's going down to 85 or lower. So I would say this is sit and wait, but it's a very good setup coming. Either you're over 106 plus, or you're below 90, let's call it 98, just to be safe, because this is a heavy watch. Something big is coming. I don't want to front run it or anticipate, because you get your face ripped off if you're wrong. But a big move is a brewing on this in either direction.
This is almost one where like you could buy both sides if you're an options trader. But yeah, this is the setup.
Okay. I know we did the treasuries, but SBET, any thoughts on this one? That's trading, I think, either exactly at NAV or slightly below NAV.
I don't know the management here. I think it's like oh, so this is similar. This is super similar. Like the 38 level on BMNR is equivalent to $9 on SBET.
Yeah.
No, I'm sorry. It's a little bit further off. The 38 level on BMNR is equivalent to, geez, it looks more like $12 on SBET. And this has a $17 very medium term shelf. It's really not that strong. 1, 2, 3, 4. Like it's really not that. This looks like very teetery. This does not look that strong at all. Yeah, this is under. I'd say here's your volume shelf. It's at 20. $20 is going to be like that psychological level. It's below that in all your significant SMA. So I would wait on this. This is going to definitely be stronger if it's over 20. I mean, I could do the same exercise on SBET as I do on like any other ticker and BMR, but like that would be 21. You got to be over 21 before you're back above. If you're over 18, then cool, your upside is up to 21. These are just like the most volatile. Where's my monthly low? Oh my goodness. Yeah, so the monthly high is 40, the monthly low is 10. Yeah, and it was the same from the upside. $40 right over here, could not break above. The monthly low it's like $9. It is what it is.
And it was stuck at 9 for a minute before the treasuries really started breaking out. Okay, Webull. Any thoughts on this one?
I would rather DraftKings. Is that left field?
No, I think it's well, I'm biased, but I think there's other brokerages that hurt Webull, whereas DraftKings doesn't have as much competition. So I don't hate that. Like I looked at Webull's options growth, dude, it's 8% year over year. I can't fathom how in a bull market they're growing less than 10% in the most bullish indicator of that bull market, which is leverage options. So although revenue is growing at 46%, I don't get how they're not growing the core part of the business.
Well, it's clearly not their core. Well, they probably they have futures. They had futures before Robinhood did. Yeah, I mean,
markets soon, prediction markets.
Yeah, I mean, so 1368. If it can get back above that, cool. But it'll be back in the 15s, and then you gotta be really careful. That's like half of last week's range. But if it can't get back over 1370s, then yeah, you're heading to 12s. But it's very choppy, kind of trendless setup here. The low end's like just under 12 for now.
Okay. ASTS.
Yeah, but DraftKings is it's like an annual trade. Side note. You buy like preseason NFL.
Well, you've been fueling Hood's prediction market revenue.
No, I mean annual. Like every year, it's like everybody does it. It's like you buy Apple and anyways. Statistically driven. ASTS is not bad, but it's not. So it's got to hold. I'd say 51. It has to hold 51. The problem is it's like right in between last month's range. So like this is last month's range, and this is kind of like your bear zone, bearish retracement here. 50 between 53. 54 and 50. It looks good ish, but this type of good could turn ugly really fast too. It depends. Like, this is a setup where, like, in 1 day's time, this could look like, here's an example. The next candle on ASTS could look like this. And all of a sudden, this is like, wow, this could be like a super obvious, oh, it was a bear flag or bull flag. And it's just broken out to the upside, right? And like, how could you not see that, right? Like, bull flag, boom.
Right.
But get this. Or the next candle could easily look like that also. And then you'd be like, Jason, how did you not see that this was just obviously some Head and Shoulders breakdown at the neckline? I'd be like, I don't know, right? So like, it's one of those setups that's like, it's very teeter-tottery. And that pivot is, so the point at which this will decide what it's going to be is going to be 54. So if it's over 54, yeah, you're going to have that bull flag breakout. And if it is below, in fact, like 45s, then you're going to have that bear flag break, that Head and Shoulders type breakdown. And that support area is in the low 40s, and a full breakdown is in the 36s.
HIMS, which still has a 40% short float.
Not from you. Ooh.
Not from me. It is funny because everyone's going after like Open Door and these other stocks, and they think like there's some short squeeze.
Yeah.
Where fundamentally those companies aren't doing that well. HIMS is doing great, and there's actually a world in which you should see a squeeze at 40%. But then, there needs to be some catalysts to get there.
Yeah. So is a positive launch catalyst announced for Friday for ASTS. You gotta be careful, right? So like trading news, there's if you guys want to learn some Jedi mind tricks on trading news, if good news comes out and the price goes down, it's a short. If bad news comes out and the price goes up, it's a long.
Long, yeah.
Because it was already priced in. If it's bullish news and the price does not move, or if it's bullish news and the price goes up, or if it's bullish news and the price goes down, it is a short. It was already priced in, and the market is just so fickle. It's like, what have you done? What are you doing for me next? That's all it wants to know.
Okay, well, is this news? HIMS CEO followed Vlad yesterday on Twitter.
Hey,
I guess we'll see how the stock reacts.
We won't know until tomorrow.
He only follows 9 people. Vlad is one of those 9 people now. So
Yeah, interesting spot at 40. It's a nice round number. It happens to be the 200-day SMA also. It doesn't mean, just because the 200-day SMA, it doesn't mean it's going to hold. I could easily see something like this happening. So I would say near-term support, sure. But I easily see something like that.
Mid-30s, that's like $7-8 billion market cap. That would be.
Yeah. But yeah, I'd rather see it comfortably over 45 to be more comfortable with it. Other than that, like, this is general support for HIMS. The same thing though, like, it's 45. So 45, 46. If it's over 45, 46, this looks good. Until then, you got to like hang tight. Until then, $40, give or take, is your support.
Okay. Nebius. And then we'll do one more after that, guys, and then we'll call it a day.
Yeah, it's somewhere sub 58. Was this earnings? Oh yeah. So I think this one looks sideways for quite a while until it can get over that earnings follow through, which is around 75. So the weekly high is here, which is it's a good move, 72. So here's the thing on Nebius, if it can get back over 72 and a half, that's nice. It's almost like Arista, where it's like last time we talked about it, is like it looks nice, but I'm still gonna need to see more, right? So meaning even if it got back to 72 and a half and slightly higher, it really needs to get over 76 for this to be good. When you have, we call this like a power earnings gap, a lot of times there's some serious digestion that needs to go down for like 30 days. And it might end up creating your kind of bull flag like that. And eventually, sure, ideally it breaks out, but this is digestion at its finest, which means that around 58, however short-lived that pullback might look like, somewhere between, I'll say here, 62 and 58 in this block here, that becomes where you'd like to see it get picked off, generally speaking.
Okay. Okay, so I actually have two more left. Oscar and Lulu. You can do whichever one you want first. Lulu has earnings coming up. Oscar, it looks kind of like this Oracle. It looks like they're kind of breaking out a little bit, but
how's this chart look, guys?
Oracle, I mean, they took a beating off of NVIDIA, but I also felt they didn't deserve to be at 250 in July.
Yeah, there's a lot of charts that look like this. This is a pretty bearish setup.
Yeah.
I think so. So sector sentiment matters, right? We talked a while ago about, Buffett's buy on UNH could possibly change the sentiment for healthcare as a whole. And again, if you're going to be a little bit more defensive coming into September, this is a good place to be. Could be a good place to be. This 1750 is constructive. That's good. That red is quarterly. Blue is weekly that I'm using. Yellow we know is monthly. So monthly high here, actually constructive. So, and monthly low here. So I got three colors on this chart. I'm going to do a fib here to here. If it can get over 17, and this is small, it's a penny stock. I say penny stock, it is what it is. If it can get over, and there's a bit of a gap in this chart. I don't remember what the gap is for. So if it can get over that 17 and a half kind of hump, then we should see what I don't know what this gap was for. What was that gap for?
If that's July, that's Big Beautiful Bill. That one got passed.
Oh, is it? Okay.
Basically, new frameworks on healthcare regulation kind of scared the entire market. Because it went from 11 to 23, then back down to 12, and now it's back to 17. So I guess the market still isn't sure, how much of the BBB actually matters.
The BBB.
The BBB. The big.
Too funny. All right. I would defer to long to be long here. Why does this feel like I'm on watch? I don't know why this thing does this sometimes. So this is a bullish retracement on the weekly scale. So weekly is the blue. So 1480. God, this colors. So 1480 to 1771. That's the weekly candle, weekly high, weekly prior, last week's high to last week's low. In this area, did I measure that right? Low to high. Nope. Here. 1627 to, what is that, 1580? This is a bullish retracement, so almost there. So in this area, that is about 50%, or the golden pocket, if you will, of last week's range. So a dip in this area would actually line up to about the 20-day SMA and pretty much your 618 type retracement of last week's range. I would like to see that hold for Oscar this coming week, and I would be happy with that. Moving forward, the next trajectory I would like to see is just this slow, steady climb. Then I would like to see it run into 17. So right now, I'd like to see this hold. If that does not hold, then I know it's coming back to 1482. And that's the low of the week. So ideally 16s, low 16s this week. If that doesn't work, then it's going to go to 1482. I know that definitively. And then assuming those levels hold, the next stop should be into those. It's got to get through 1750s, and then we get to the 19s. And if I can get over 19, then it is 22 next. And then we can start talking longer, but not until we get through that.
All right, last one. And again, guys, if we did not get to your ticker, we will get through a lot of these tomorrow on the market close for Technical Tuesday. Lulu, which I think has earnings
You keep pronouncing it wrong. I don't know what you're doing.
It has earnings on Thursday.
Ruru.
This one is highly anticipated. Like, you would think it's not, but it's in the S&P. It's down 50%, and everyone thinks that it's cheap.
Dude, it probably is cheap. Google was cheap for the longest time.
That is true.
Where's the PE thing here?
But Google's a $2 trillion company. Lululemon is like, there's so much fascination.
25 billion.
Brand. Yeah.
I mean, you still have your pants, right? Are you wearing them?
I'm not wearing them today, but I still have my pants. This is from Lulu. This hoodie right here. So
is that your $200 hoodie?
No, it's not. This wasn't 200. This was like 80 or something.
Oh,
still
man.
too much, but.
Well, look, it's not going to break down. To me, it's not going to break down before earnings. Like, this thing's down so deep in the dumpster. Like, it's not going to break down before earnings any more than it already has. I don't think so. This yellow line, we already did this. $200.49. That's your last month. This is the whole month's range. That monthly range, dude, is 20%. That's massive.
Dude, what if they come out and say tariffs are screwing us and this falls to like 150? Like, it would be a disaster. But theoretically, that shouldn't happen. Trading at 13 times, 12 times, they should be insulated from that, even if they do say it.
Yeah, I mean, look at this. This is last quarter's level. The quarterly range is 280 to 4.
When people say hood is too volatile to be in the S&P, I'm like, well, what is this shit? What is this shit that got allowed to go into the S&P?
Yeah.
Is
it really
ridiculous all year?
I mean, so it is 160s. Just swagging that. I will actually just say, oops. Maybe not 160, like 175. If it were just to take this move and go down, it would be like 175. But
any good news gets you to what, 230, 240-ish? Roundabout?
250.
250. Okay.
So I'll do it this way. So like, if this is your monthly, this is your monthly range. Just so again, these are technicals, but the thing is, it will be a fundamental move. So fundamentals will supersede my technical shenanigans right now. But technically speaking, so the way this will work is that whatever happens let's say nothing. Let's say Lulu earnings comes out. For technicals to work here, this is what would happen. If Lulu earnings comes out, the stock is flat. Then technicals do come into play. Stock is flat and technicals come into play. What will need to happen is that it can recover above 208. Above 208, then you look like this, and your first target is 219. That is the is that 219? I have this reverse on here. I don't know why this happened. Not 219. Hello. 225. That's 50% of the monthly range. If you can actually break 225, 226, for sure, you go into the 230 area. If at some point you breach, what is that? 235, it's like a near foregone conclusion that you are actually going to get to 250, but I would stop it short just above 250 or just below 250 to 246. And that's target acquired. And that entire trajectory would look like 208, 18%, $37 in probably pretty short order within the month, at least. Yeah. So I would say 245, but a fundamental catalyst can make this move happen overnight for sure, or more. And if at some point you get over that, and I'm going like, so normally I would just go one level at a time because it's fundamental. It might take out multiple levels at a time. If at some point you get over 250, well, then you go to the quarterly level, which is 282. Or not 282, it's 280. And each one of these lines that I've now drawn, which you guys have on your screen here, hopefully you can still see it, becomes a target from a technical perspective.
Yeah, and I think if they come out and just like say the tariffs aren't as bad as we thought, because they did really, say the tariffs are, maybe they were sandbagging last quarter. Maybe they ease up on the sandbagging, The thesis that other people have is that they have a tote bag that's going viral on TikTok. I don't know if that's enough to generate a ton of earnings growth, but yeah, Thursday we will have a better understanding of Lulu. All right, that is it, folks. Thank you all for joining. There's Jason's Twitter right there.
Again, hopefully I didn't dump all over anybody's stock or rain on any parades. I mean, it's all good.
Well, the good thing is also because we got through a lot of the main tickers, tomorrow we can actually focus on some lesser known tickers. So we don't have to do NVIDIA and HUD and all those stuff again because we literally did it today. Yeah. But tomorrow should be good. JS, thanks for the super chat. Thank you to both of you. Always valuable and actionable insights. Jason has proved to me that TA is a valuable tool and not something to dismiss.
No, yeah, I think appreciate you guys too, right? Like this is, love the community for sure. Spencer in the house. Love it.
Yeah, and look, in general, I think everyone's feeling a little bearish for September, but we're going to get through it together.
We don't know, right? Like I'm really interested to see what happens. So Fridays are going to be a huge day. And then we're going to have FOMC. And I think there's some serious opportunities coming. And it's not a foregone conclusion that September is bearish. And by the way, have you given them the stats? Like, what does bearish look like? Generally speaking, I think it's like 1% or something. Like 1.
Yeah, it's like 1.3, 1.4 down on the historic.
Yeah, I was just gonna pull up the seasonal stats for SPY, or even QQQ.
Which is if we just had a 4% month. So if we go down 1%, like no one.
Yeah. So 47% of the time, change was negative. And it's negative 1.26%.
Yeah. And
then I can go down into weekly. It's mostly in 1 week. Look at this.
Yeah. It's 1 week of pain, and then we kind of just deal with it for the rest of the month.
Yeah. And then it's 0.9% for the 40th week. Oh man. Wait, so we're here. week
So
36.
third week of
It's
September.
Week 39. So it's literally 1 week. So I'm drilling down into SPY seasonality. It's like 1 week. 1 week, 39th week of the year. I can do this for QQQ. These are seasonal stats. So 38th week of the year, that's 40% of the time here. All right.
Bro, this is a 15-year weekly analysis, and 7 weeks out of 52 tend to be red. That is crazy. That just shows you why people are bullish long term, right?
You haven't seen this before?
I've
Not like
never
broken
seen
down
that.
like this.
No, I've never seen this.
Oh, dude.
Huh.
Look at this. Week 37. I'm just saying, like it's September. Yeah, historically, doo-doo. But like, how is that broken out? We've been talking about this. It's like it's like 1-2 weeks maybe, but sometimes it's so concentrated in a couple days of like really nasty pain sometimes. Like you want to do it days. I can literally drill this down into hour of the day.
Can we do since 2020? Let's do last 5 years. Let's see how it works. It gets. Let's do since March 2020.
Oh, guys, we're not leaving.
Or January. Well, we're about to, but
No, what, January?
yeah.
You want to stay on the cues?
Yeah.
Okay.
Okay, so you get 3 more weeks to get red.
Well, let's talk about this. So week 36, 2.5%. So it's 20%. So what are we reading here? Mean change was down 2.5%. It says 20%. 20% of them were positive. So 80% of the time.
Negative.
That's a good stat, right?
Yeah.
40% were positive. So 60% of the time. Oh, wait a second. 0.7% green. Week 37.
Which means most likely it's gonna be red.
No, 0.7% of the time green.
Doesn't that mean 99.3% was red?
We need both. So like this one next week. All right. Next week, 80% probability. This is gross. 80% probability to be down 2.5%. That's not a good stat. That's a lot of percent and a high. Anyways.
Oh, I see the lines at the okay. That's what you're saying. So there's a okay. Yeah.
But the average change. So yeah, it's a 60% probability of being down. But the average change is not really, but the average mean change is like 0.7%. It's not even that big of a change for the following week. And then the week after that, it's another week. So 1 week down, 1 week chop, another week down. And then boom, maybe negative. Then it's 50-50, negative 0.5%, 50-50, negative 0.7%. And then 100, look at that. Week 41. What week is week 41?
I think that's second week of October, I think.
There it is. What is the second week of October? It's the beginning of the eating season. Remember who taught you that?
Yeah, eating season. You go with your family Thanksgiving. You talk about the stocks you're buying. You talk about buying Ethereum. Okay, so the takeaway is expect September to be bloody, but there is sunshine after the rain once you get through it. And to be honest,
it's not only sunshine. It's a big it's big.
Yeah, and we probably need some rain, as much as I hate to say it, because August historically went against the trend, right? Up 4%.
Yeah, so seasonality in general has been a little skewed this year in general right now. So, and look, we've already been through this, right? So like we've already been through some pretty bad historical moves. We've already been through this. So like you've seen this already. Similar stats.
Yeah.
Just recently. I don't know if you knew.
Dude, it's going to be funny if September is a face ripper. It will be so funny if September comes out and says, screw you, we're going higher. It would be a little scary to see it, but it would be wild. Because that's what August did. August literally said, screw you, we're going higher.
Yeah.
And the earnings were enough to justify it as well.
Is this a crazy that 100% over 6? Well, this is only 6 years now. Up
Okay,
1.3%.
last thing, let's look at SPY since COVID.
He's geeking out on this. He likes
Dude,
it.
I have to buy this thing, whatever it is. This is like legit.
It's TrendSpider. Okay.
Same thing.
Here it is again. Week 41, 100% up 1.5%. Anyways, yeah. So it's same stats. So we're in this, so since January 2020.
Relatively the same. Almost exactly the same as week 37 too. 0.62 versus 0.71. Yeah. All right. Good
so
stuff.
it's concentrated in essentially a couple weeks, which is why. So when I went like super bearish that one time, and they're like, "What do you do?" I was like, I would probably just buy like really short term duration protection. Like you don't usually need a lot if you're going to do something.
Especially if it's like 2-3 week type of hedge.
Yeah. But anyways.
All right, folks. Thank you to Jason as always. He is our quant. He's my quant, basically.
Yeah, my quant. No, I have a quant, but I have a sports quant, by the way.
You're a sports quant. Are you as successful as you've been with the NBA on NFL games so far?
Dude, first of all, NFL hasn't even started. He's an NCAA quant. He's a legitimate NCAA quant. Like, it's crazy. Like college anything, it's insane. But what do they call them? They call them sharps. We're like when Robin came out with the stuff, and it's like he's all excited because like he can't really he gets throttled. Like he gets limited otherwise. But yeah. Robin had doing. Anyways, it's gonna be big. It's be like he's telling me, dude, it's gonna be Thursday, Saturday, Sunday, Monday. Strap in, and I'm like, oh my god, I'm not ready.
It's a good product that they unveiled for people like him. I mean, that's just
yeah. So our server is massive. I was gonna be in HQ2 today too, but like we've just been. We closed this up. I've been like heads down, banging out our school again stuff. It's taken me so long, but hopefully this launch is good. Like it's a lot, but I'm over here just like bugging out on this stuff. He's getting the sports betting things going. Let's go Packers.
Are you a Niners fan because of Bay Area?
Well, I mean, you're kind of born into it. Niners and was Raiders, but well, I think there's two different personalities. But yeah, Niners are everywhere. Truth be told, I like the Sharks, but hockey. But anyways.
All right.
Well, I'll see you guys tomorrow.
Yeah, we might as well do a little word of the day while you're here. It's Gusto.
It's Gusto.
Of course. Why do I swear I did not. I'm not trolling. I really thought it was. There's a company called Gusto. You know this company, right? They do HR payroll. Like,
no.
Are they called Gusto too? Yeah, Gusto. Gusto.com, bro. This is an HR company. That's why I thought it was freaking. Did you actually think it was Gusto, bro? I legit. Whatever.
He does this on purpose.
Did you know? But it means enjoyment. Did you know there's a difference between mute point and moot point? Like when you're saying, oh, that's a mute point, I thought it was MUTE. Like, oh, we're muting that point. It's a mute point. Apparently it's MOOT. Like, did you know that? Like
I don't know whether to believe you or not. Like, did you really do debate like at all? Like,
dude, I don't know. I was talking about
are you not a master debater?
I was talking about some AI CapEx shit on Friday. It was right before the bell. I was like,
he is literally baiting us, guys. I don't know. I don't buy it.
I was like, bro, this is a mute point. And then I kept talking about whatever else I was talking. The chat's like, did you just? And I was like, what are you guys going off about? Have you never heard of mute point? Like, what's wrong with you guys? And they were like, it's not mute, bro. I was like, oh, whatever. Anyway, that's it. I'll be live 7 p.m. with the actual studio reveal. And
Can you give us a hint? Is there a are we doing like a lottery or something? Like what color are the bricks? Or is there a
Okay, so 2 things. 1, there will be bricks.
Okay, so was there a lottery? Was there like a guessing something going on here?
Well, no, but the fact that you said lottery just reminded me to. I was going to say this during the thing, but I'll say it right now. We are doing a giveaway, so I'm going to be giving away a bunch of money, doing a fun little celebration for the. I didn't say I was going to do it.
For your birthday?
Yes, for my like 100th birthday or whatever. So we'll be giving away some money. So we'll have some fun little games to play for the giveaway. We're going to start at 7. Futures will open, or overnight opens at 8. Futures open at 6. So at 8, yeah, we'll do overnight markets, and that's it. Tomorrow, officially, we start the market open from the new apartment.
You have a costume, or are you wearing your Ruru?
Yes, I will be wearing my Ruru. And then Wednesday, I'm traveling, so I'll be gone. I'll still do the market open though, but like this whole week's going to be traveling, and then Friday S&P maybe. I'll be at the airport again on Friday.
S&P maybe.
Well, S&P will be announcing on Friday if they do a rebalance, hopefully, and then maybe Hood gets.
Are you talking about because of Walgreens?
No, just in general. The September 5th, the first Friday of the new quarter, they have to announce a rebalance.
Oh, did you talk to them, by the way? I think that the hoodie looks like weakness because of the stupid CBOE. Wasn't because they put IBKR in there and people like, oh, whatever.
I don't think Hood's getting in, bro. They put in IBKR in block. Like at this point, I'm just getting bearish on them getting in this year.
Did you tell them about like? So I am dragging the stream on, not Amit. But if you guys ever go to the spider sector website and you look at the actual like what is in the indexes, I don't know if you've ever done this. Oh, thank you. So this is like spiders.com sector tracker. If you're upset about who's getting in, who's not, just take a look at this. I was just looking at this, and I do this from time to time. You know, I always say what sector is weak, what sector is strong. I would just go into this, and I go into let's do this financials, and you know, you just look at who's whatever. And I was going through this. First of all, we're talking about people that put Coinbase in the XLF. I don't know how that happened. Coinbase is in the XLF. Hoodie not being in. I mean, and then you can sort this in industrials. Watch this. Index weight. How in the world did Uber become the how in the world did Uber Technologies become the 4th largest weighting of the XLI industrial?
That is stupid, bro. That's like
Boeing.
The S&P is like the Grammys, bro. The S&P is like the Grammys.
Like, and to be upset about like Hood not get, dude, come on. Like, what were we expecting here? I'm just saying, this is some shenanigans. I'm not gonna say it's just like, okay, let's be real. That's what's happening. So
okay, so does your so I'll be at the airport again for the S&P inclusion. It's literally gonna happen like 30 minutes before the flight. What does your gut say? Do you think we get in or?
It's transportation. All right, fine. But I do not think about Uber as transportation, as industrial. I just don't. I don't know what to say, guys. Above Boeing?
Yeah, I mean, that's a little weird.
I just don't.
So do you think we get in or no?
You know what? It has actually never met. Uh-oh. What happened to my thing?
You blacked out, bro.
Dude, how did it black out, though? I don't know how it blacked out. Wow.
I don't know if they get in, bro. Or now you're back.
It was actually never part of my thesis. So it didn't really matter to me.
Yeah, dude, we 3X'd without it. We don't need it, but like it's just getting disrespectful at this point, you know?
Yeah, I think it just shows that like people thought it was going to be
Maybe people were holding out because they thought it was going to be included in, which is fine, but it was just never part of my thesis. So it didn't really matter to me that it is or isn't going to be included in the S&P 500, which is all I think we're seeing. And if it's not, it still doesn't change anything to me.
Yeah.
Eventually,
also,
there won't even be a choice because it'll be so big. Like, they're not going to have a choice.
Also, the pump might just get sold, bro. Like, it's September, right? So, like, if it pumps 10%, 20%, it might just get sold off into the end of September. If it, so like it might not actually hold an S&P. Like, most people want it to get in for the stock price to go up, which over time that'll happen, but the short-term pump might not even be there.
Right. So, I mean, regardless, it doesn't, like I said, it doesn't change the investment thesis to me one way or the other.
Right. All right. Good stuff.
Cool.
Thank you, Jason. Appreciate you deeply. We'll see you again tomorrow, Technical Tuesday. First stream from the apartment tonight, 7 p.m. Eastern. We'll be doing some giveaways, talking, new studio background, and then at 8 p.m. we'll have the overnight markets, and we'll see what happens from there.
Cool. Adios.
All right. Thank you, Jason. His Twitter's in the chat. I will see you guys later tonight. Bye, everybody.
Adios.